Hey guys, welcome back to my channel Tradingfyive. So today's video is going to be about introduction to technical analysis. In my previous video, that is technical versus fundamental analysis, we had studied a brief about technical analysis. If you have not watched the video yet, I have given it in the I button. Make sure you watch it first. Basically the analysis which helps us to predict the direction of the market or any other individual stock by considering its price, volume, charts, trends, etc. is nothing but technical analysis. In this video, we will just study about the various topics that are required to study technical analysis in depth. So firstly, we're gonna see is what is demand and supply. Nextly, we have is what creates buying pressure and selling pressure in the market. Next is what is bullish market and bearish market. And lastly, we're gonna see is what is correction and bounce back that occurs in the market. So let's get started with demand and supply. Demand is referred as the buying pressure which is created due to heavy buying, that is continuous buying of stocks of a company at a particular level. In opposition to demand, we have supply, which is referred as the selling pressure which is created due to heavy selling, or I can say is that continuous selling of the stocks of a company at a particular level. Before getting started with technical analysis, it is necessary to know the demand and supply and what are their effects on the market. In first condition, when the demand outnumbers the supply, that is the demand is more than the supply, price of the stock is said to be rising. Like when the demand of a particular stock increases than its supply, the stock will be moving in upward direction. In next condition, we have demand is less than supply. In this condition, price of the stock is said to be falling. And in third condition, when the demand and supply is almost equal, price of the stock is said to be in a range bound condition, that is the price not even rises or falls, just moves in a range. And hence just by considering these three conditions, we can have a clear view about the market. Next what we're gonna study is buying and selling pressure. The buying pressure or the selling pressure in the market is generated due to factors like news, upcoming event, incline or decline, that is growth or decline in the earnings of the stock. All these factors attract the buyers or sellers towards the market. If all these factors tend to be positive, then of course the buyers will be attracted towards the stock. Whereas if all these factors tends to be negative, then the sellers are attracted towards the stock. As a result of which, a buying pressure or selling pressure is exerted on the stock, which directs the price of the stock. Next what we're gonna learn is bullish market. As the name itself indicates, the continuous rising market, that is when the market is moving in a continuous upward direction, then it is said to be as bullish market. Like Nifty from around 30 March 2020 to around 11 October 2021 was a great example of bullish market. As you can see, market was continuously making new highs and moving upward, just like a bullish market. Next what we have is bearish market. Now, just as opposite to bullish market, bearish market is the continuously falling market. That is when the market is continuously moving in a downward direction is said to be as bearish market. Now again, if we take example of Nifty from around 31 December 2007 to around 20 October 2008 was a great example of bearish market. Nifty was making new lows and continuously moving down just like a bearish market. Next which we're gonna study is about correction. The small retracement that occurs in a bullish market are called as correction. Now let's understand this. The market never moves in a straight direction. It simply moves in upward and downward steps just like this. Here you can see some of the retracements that the market makes in a bullish market. All of these retracements are called as corrections. Basically, correction can also be defined as the small bearish moves that the market make in a strong upward bullish move. Nextly, what we're gonna see is about bounce back. The small retracement that occurs when the market is bearish are called as bounce backs. As the market never moves upward in a straight line, similarly the market never goes downward in a straight line. Simply forms what I can say is that upward downward pattern while moving downwards. As you can see, market makes some upward retracement just like this in a bearish condition. These retracements are nothing but called as bounce back. Bounce back can also be simply defined as small bullish moves that occurs in strong bearish moves. Now all of these may sound very small topic, but at the same time very important topic to learn technical analysis. In my very next video, we'll learn about the very first step in technical analysis. So thank you for watching this video till the end. If you like this video, please hit the like button. Share this video as much as possible, and at last subscribe to my channel Tradingfyive and press the notification bell. I will see you in the next